Hello and good evening, everybody. Welcome to tonight's Equity Strikers Copy Time session. Um, I hope you guys already had your dinner. Okay, welcome everyone. If you can hear me, can you just type one in the comment? Okay, if you can hear me, can you just type one on the comment section, and we can start to proceed. Okay, once again, welcome everybody to tonight's Equity Striker Copy Time session, where we'll be talking about how does the budget 2023 can affect the stock market. So, of course, there are a lot of items in budget 2023. We're just going to go through a few of the things that is being touched in the budget 2023 and see how it can actually affect the markets. All right. But of course, we are all facing challenges right now. So we're going to talk about that later as well. And how has the market reacted ever since the budget was being announced? Thank you, Jatinder. Thank you, Tan Chai Ha. Okay, what about you guys? What do you think about the budget 2023 personally? How does it affect you? Is it a good, I mean, you don't need to type so long, but is it a good thing or is it okay lah, miss and pass? You can just type in the comment as I continue. Yeah. So, um, so we already got our budget 2023. Of course, it affects. Um, I mean, it affects everybody. Well, so for certain people, it affects them negatively. For some people, it affects them positively, right? But just going to share with you how and what the industry players are thinking of the 2023 budget, right? So before I start, whatever that is being shared today is for educational purposes only. Okay, it's not intended as any investment advice, right? So if you want to look for investment advice, please do look for a licensed investment advisor. Now, I think there'll be about 7 or 8 points that I'll be talking about and how it can affect the market. And of course, later I'll show you how the market has responded. All right. Now, the first one is um, a tax deduction of up to 1.5 million on listing expenses on the ACE and LEAP market. Now, in Bursa Malaysia, there are basically three categories of markets, right? The first one is the main market, right? And then we have the ACE market and we have the LEAP market, right? So the LEAP one are supposed to be companies that are still new startups that are supposed to accelerate and maybe later on list into the ACE or main market, right? So this one here, the tax deduction on the listing expenses, could increase the number of IPOs this year, especially in the ACE market. We can see over the past years, right, on this graph over here, that there is a growth in the ACE market. The green line the red line that you see there, that's the ACE market. The green line that you see is the total number of IPOs or newly listed companies in these 5 years, right? So 2022 we see an increase, and that increase is basically mostly from the ACE market listing, because last year for listing in the ACE market, normally for companies who want to go to the ACE market, they have to get the approval from Bursa Malaysia and also the Securities Commission. Okay, but last year they only need to get approval from Bursa Malaysia. So we see quite a number of companies that are being listed in the ACE market in 2022, and even up to today, as at the end of February, which is in the 2 months, we already see 7 companies listed in the ACE market and 2 companies listed in the main market, right? So looking at the trend, we're probably going to see a number of more companies being listed in the markets, and therefore provide more opportunities for investors to choose. right? Whether they want to invest in the ACE market or the main market or the lead market. And hopefully later there'll be another announcement in the budget on the capital gain tax for private companies, and that would also lead to more companies wanting to get listed into Bursa Malaysia, right? Because you get the tax, you get the tax deduction from listing, right? So this is one is basically, of course, this whole idea here from the government is to boost more companies, especially SMEs, to bring their business, you know, uh, to expand their business by getting funding from the public through the IPOs or through the listing in Bursa Malaysia lah. Okay. Now the second one is the tax deduction on sustainable and responsible investment, which is SRI. We call it SRI. Linked sukuk, which are sukuk are basically Sharia compliant bonds. All right. Again, the deduction in cost will also encourage companies to issue sustainable and responsible investment bonds. All right. And that should also help companies to raise funds at a lower cost. All right. So this one again helps companies lah who wants to if they want to get money or funding through bonds and through the SRI link suku, they are able to get lower cost of acquiring that funds. All right. Now this one, higher income tax for higher income group and lower taxes for lower income group. Now, how do you think this will affect markets as investors? All right. So basically, this is, the government's purpose to do this is to bridge the income gap that we see. Those who are earning very high salary or high income, the numbers are small, but they gain more income, right? Whereas majority of the Malaysians are in the lower bracket tax group. Okay, so the thing is that now you can see the both ways that when we increase the tax, those earning between above 100,000 ringgit, right? You'll think that, you know what, if that rich guys or the person who has more money are being taxed, then they will invest lesser, right? But that's not how most of the high net individuals think, especially if they know about investing. They will be looking for more opportunities to invest and gain back that 0.5% increase or 1 or 2% increase. Okay. They need their money to work harder for them, because if not, the tax will take away their savings lah. All right. So they have to actually find a way to get more investments or to do more investments, right? Now, whether it's into a stock market or whether into other investment products, it's really up to them, lah, right? But because the stock market has actually come down quite significantly in over the past 2 years, there may be pockets of opportunities, right? Rather than investing in properties, now that interest rates are higher, right? It's going to be a little bit difficult to actually borrow money to invest, right? It's not difficult, but the cost is higher. So if you look at this on the other side, if you can't spend money on luxury items like watches and fashion, because you're going to pay more for all these luxury items, the only thing what we can do with the money is basically to invest, right, into fixed deposits. But fixed deposits also don't give you that much returns, right? Or you can put in the bank or you invest in, right? And the stock market right now actually provides a lot of opportunities because it's come down a lot. So it's really a good time to look at the markets and find opportunities. The market may go down some more if, let's say, the risk of economies going to recession. There'll probably be another sell down. But our market has already been down for quite a number of years. Okay, so even if it comes down, it probably will not come down as much as the other markets. And Malaysian market has always been a defensive market, right? It doesn't really follow the Western markets or especially the US markets, right? So this one here, will help a little bit on the stock market. but of course, people will be, especially those with higher income and a little bit more wealthier, they'll be looking for investment opportunities to grow their income to pay for the higher taxes, right? This is important as well. This is, of course, now they are still studying whether to impose capital gains tax on private companies if they sell, right? And of course, this they are still in a study right now, and by 2024 we will know whether it's going to be implemented or not, lah. Okay, so the capital gain tax this on private companies and not public companies. Okay, and therefore, if I'm a private company, for example, a Sendirian Berhad, I built a business, uh, strongly, and I've actually get quite good profits in the company. And if I want to sell my share, if the value goes higher, I will get tax for it, right? If I sell my shares, um, but we don't have capital gains tax on public listed companies. So if I sell my shares, personal, of course, you get tax, right? So this basically will help, right? More companies, especially SMEs that want to grow further, to look at listing their companies or make their shares publicly available so that they don't get this capital gains tax, right? Especially companies that are growing fast, because there are a lot of companies that are growing right now. They are making money for themselves. If I'm a Cinderella Bahad and I make a lot of money and my company has been doing very well, why do I need to share it, right? To other people? Okay, that's the impression that most of the Cinderella Bahad or private companies think, right? Why do I need to share my profits with everyone if I'm doing well? I don't need the money, right? I have cash, I can grow myself. Okay, so these are the companies that are being targeted. They want to grow bigger, but because there will be tax imposed, then it's better for their company to get listed. Number one, if they get listed, they also get tax deductions, okay, on listing on the A's or on the lead market. Okay, so this actually comes hand in hand. Okay, tax the private companies, reduce tax for companies that wants to go listing, so that it will channel all these companies going to listing, right? So this, of course, in 2023, we'll probably see more companies being listed in Bursa Malaysia. So if you look at the previous chart over here, there are total about 34 companies being listed in 2022, which is one of the highest over that 5 years, right, in 2022. And moving forward, 2023, 2024, we're probably going to see more companies being listed in Bursa Malaysia. That's how we see it. In fact, if you look at some of the experts here have also mentioned from the Straits Times, this is a Singapore publication, that 2023 will probably see more companies, being listed in the local stock market, which is Bursa Malaysia, right? Um, However, okay, so there's also another side to this, lah. Okay, but this is more of a long-term effect, right? So what's going to happen to private companies? Okay, Sdn Bhd, they are owned by foreign entities, right? Um, because if they want to bring the company high, they want to grow the company and so on and so forth, and when they want to sell it, for example, to a private equity fund or any funds that want to buy the company, they can get tax for it. Okay, and so this will basically lead, okay, over the long term, if the foreign entities who own businesses or private companies here in Malaysia, they may want to also think of investing in other places, right? Which does not impose the capital gains tax. In Singapore and Hong Kong, for example, which are the two largest financial institutions markets close to Malaysia, they do not impose the capital gains tax or CGT. Okay, so it can go both ways, lah, right? Where companies may want to list their companies publicly in the stock exchange, or they may just, close the company and bring the company else, or start the company else into other countries that doesn't have capital gain tax. But that's a little bit more longer term. So basically here, what this person here is saying is that the government really need to also look at um, ways to overcome, or ways to find ways so that the foreign entities will not invest in other countries lah, right, or bring the money out. That's what they do not want. Okay. Right. The budget also proposed a 97 billion ringgit in development spending. Is higher than the previous year, and therefore, there'll be more spending this year on building of infrastructure, public infrastructures, and so on and so forth, and therefore create businesses for companies, right? And of course, in Bursa Malaysia, we have quite a number of development and construction companies, and normally for government projects, right, it's always given to bigger companies, right? And of course, companies that are listed in Bursa Malaysia are considered bigger. And of course, normally what happens is once the big project is given to a big company, they will divide them into subcontractors and subcontractors and so on, right? But the spending that's increased about 26 billion, higher than last year, which is the previous year in 2021, 2022. That will actually, in terms of percentage, we're looking at about nearly 30% increase, right? So that should create more activities in terms of development for this year, and therefore create more opportunities lah, right, for businesses to get more revenue for the company, all right? Now, there's also an additional allocation of 40 million for the Malaysia Co-Investment Fund, my CIF, which brings the accumulated funds to my CIF to about 300 million. So this fund is actually basically is a government, of course, it's a government fund to fund businesses that are new, like startups and so forth, right? This is to encourage new businesses, because what we see, over the past few years, because of the COVID pandemic, we have seen a lot of companies are actually gone out of business. Right, some companies are very, very careful of expanding their business, especially now where interest rates are rising. But for any economy, the businesses need to grow lah. So to build that confidence back again, and I think this is what the government is doing, is to try to help more businesses, especially in the SMEs, right? SMEs alone has another group of funds, another funds lah. Okay, but this one is basically for new companies or startups. Okay, so this will encourage new businesses, and of course, with the tax deduction for listed companies, to list your companies in Bursa Malaysia, it probably be wise to get entrepreneurs or businessmen to think today, to think as Bursa Malaysia as a way to get maybe the second round or third round of funding, rather than continue to bring it privately. Because, like I said, if they build the businesses privately and it grows and they start to sell it to a company or a private equity fund or whoever want to buy the shares, they can get tax for it. All right. Number 7, this is also important. So actually, we get the chairman of Securities Commission, Bursa Malaysia, okay, actually came out and said that they are actually quite relieved that that there's no prosperity tax, right? The windfall tax that we see that being during the COVID time, we have companies like the glove companies being taxed because they have the windfall in profits, right? But we did not see that lah. So it was not mentioned in the budget. So here, Abdul Wahid Omar, who is the chairman of Bursa Malaysia, basically said that the prosperity tax could have potentially shaved off 5 to 6% of 2023 earnings for the constituents in the KLCI. All right, so that's a relief for these companies that has actually earned a windfall over the past 1 or 2 years, and they will not be charged with this windfall tax, right? So without the prosperity tax being imposed, the analysts, of course, have a consensus forecast, a growth rate of 20.1%. This is earnings per share forecast of 20.1%, right, as compared to negative 1.3 for 2022. So actually, if they do really, implement the prosperity tax or windfall tax, it actually affect quite a lot on the earnings of a lot of companies here, right? So that actually, that's a relief lah. Okay, basically for companies that has windfall um, last year. Okay, right. So these are basically the seven things that may directly or indirectly affect the local markets. Okay. There are other, of course, there are other things like there are other budgets for other stuff, but these are the closest one that may affect the stock market. Okay, so I've already actually done my presentation. So if you guys have any comments, what do you think, or if you have any questions, you can type it down. This is an opportunity for us to have that conversation, right? What do you think of the budget? Overall, if you ask me, it's yeah, I mean, it's not really a it's going to be a big push, right, or a big factor that's going to help the stock market, right? It's more of a balanced kind of budget lah for 2023, because of course the government also have to basically balance between the spending and also the income, right? So right now, I think the main target is to basically, to tax people with more money, the wealthier ones, and then pass that benefit to the lower income group, right? In terms of businesses, of course, all of this that's been mentioned earlier that should help a little bit. But the question is, whether um, the other factors that's going to affect the economy in the short term will affect the entrepreneurs or business mindset, right? The sentiment of these business owners, because everybody is quite in a defensive mode right now, right? So I'm going to talk about that. What are the risk factors that may affect the economy after this? After when I show you the chart of KLCI, how the KLCI has performed after the budget, all right? And if you guys have any comments or questions, you can just type it down on the comment section. I'll just continue. Okay, so the chart that you see here basically is the KLCI. Um, Over the past 1 month, actually, the KLCI has gone down to a bearish trend, right? This is you look at the black line here. That's the KLCI up to yesterday, lah, right? Um, it is currently below that 30-day moving average, right? So previously, during in sometime in end of October, actually the price had a rally, or the market has a rally. The KLCI went up, but it was not sustainable, and then it went back below the moving average, right? Which shows that actually the sentiment of the market is not so positive. I think the budget that they have looked at when it was announced at this arrow over here, the market is also still falling. And today, it's not going up, it's not going down, it's still staying on the surface. Um, but what we see, right, over the past 1 week is there's an increasing volume, okay, in the KLCI constituent of companies in the index, lah, right, which shows that there is some selling pressure. All right. There are some accumulation as well that we see, because when in the markets, when investors sell, there are also investors who buy, lah, right? But the question is, as people are selling, will the buying continue to be supported? All right. But if you look at this kind of pattern historically, right? Normally the buying will eventually cool off, and that's when the markets or the prices will start to come down, right? Because we are right now in a bearish trend. As you can see, the highs are getting lower. So we may see some rebound, maybe short rebounds, but generally, if the KLCI stays below the 30-day moving average, which is currently at 1485, then the sentiment is bearish. All right. Only if the KLCI breaks above 1485, then we may see it turning over, which means that the sentiment has changed. They're more bullish about it. Yeah, but what we do not see is that after the budget, it did not spur confidence, right? It's still going down, and therefore it's not a good indication, lah, right, for the market over the budget that was being announced. Okay, so Yeah, we're probably going to see markets going down some more until we have a clearer picture or a direction of where the economy is heading. Okay, because after this, I'm going to share with you what are the concerns, right, that investors have, or in fact, not just investors, but also businesses have, right? Because markets are still quite bearish at the moment, okay, despite the budget. So despite all the factors that I mentioned to you, the 7 factors that may help to support the KLCI, but it's just not good enough to overcome that fear, all right, to overcome that fear that we see in the market, which I'll go through with you in a short while. Okay, so in the meantime, if you guys have any comments or questions, you can type it down in the comment section. Yeah. Okay, so now these are some of the major challenges. Okay, quite a number of them lah. Okay, one of it is a recession fear in some economies globally. Now we still remember in November 2022 last year, Bank Negara actually came out and said that it's very unlikely that Malaysia is going to go into a recession because we see quite good GDP growth in 2022, right? But the problem is we all do not live in an island, right? Somehow the the global economy performance will also affect the local markets, right? So there are an IMF and the World Bank are still they still haven't changed their stance since last year that there will be quite a number of um, countries that is going to go into a recession, okay, including US, um, mostly in Europe and UK, right? And you can read all these news. Like all you need to do is just type in, economies that are probably going to go into recession in the next 2 years. Whether it's on Google, and then you will see the reports from whether the International Monetary Fund or from the World Bank or from analysts. All right, so there is still this fear. Okay, although we have seen that the US has started to taper down the increase of interest rates, but it's still increasing, and that also depends basically whether the inflation rate has come down or whether the labor market is still steady, right? If there is a increase in um, you know job labor, right, and also increase in inflation, then there's a very high chance that they're going to continue to increase the interest rates. Okay, for Malaysia, okay, recent meeting in Bank Negara, we did not raise interest rates because it was still under control, because US has not increased the interest rates quite aggressively on the last OPR or last meeting, right, FOMC meeting. Um, but that's just a question mark for everybody. Okay, has the inflation really died off, right? Our economy is actually growing. Okay, because if inflation keeps on continuing, the worst could happen is a stagflation. Stagflation basically means that inflation is rising, but economies are not growing, which means that our spending power, our spending power will basically just get weaker and weaker and weaker. And normally when a country go into a stagflation, it is quite hard to come out of it. All right, so this is the worst thing that could happen. The best scenario would be inflation is being controlled, right? It does not rise that much, and economies start to grow. Again, that's when we see it start to move again. So that's why there is a concern here, right? Recession in some economies, unless, let's say, in the next few months, the World Bank and the IMF, after new data that they get, um, the economies are improving, right? But normally economic data are lagging lah. They are slow because you need to get all the data, for calculating the GDP and so on. And they could be lagging. They could be data from maybe 2 or 3 months ago, right? But the markets will basically show the confidence, right? Because markets are basically it's faster, it's leading. Okay, they react faster. So by looking at the performances of the markets, including Bursa Malaysia and the rest of the world, the confidence is not there yet, right? Which means that there are still a majority of the players or investors in the markets still do not have confidence that there will be no recession in the global economy next year. All right. Um, the other point I put here is also the key increase in key interest rates, and this has very much to do, of course, with growth or economic growth, and also inflation. Right. So this one here is, I mean, the interest rate is a policy, right? That or it's a tool that government use to control um, things like inflation and economic growth and so on and so forth, right? But definitely right now we can see that the amount of liquidity that I mean, investors and everybody has been enjoying since 2008, right? If you still remember, in 2008, when they had the subprime mortgage crisis and the financial crisis, that's when they start to have this thing called quantitative easing, right? Printing more money to help companies to bail out companies. We have been enjoying that for some time, and then when the COVID-19 pandemic hits, again, there are a lot of liquidity, right? Interest rates are low. Um, you know, there's more money flowing into the market. So we have enjoyed that for quite a number of years. And because of that, right, that 2008 event and during the pandemic, because there's so much money going around, and we get that effect today, right, which is inflation. You know, like when your money is being diluted so much, it becomes diluted, it becomes lesser in value, right? That's the that the inflation is actually a symptom of too much money in the market, right? The real reason is there's too much money. So now they are trying to fix this up, right? They are trying to fix inflation by reducing the amount of money going into the markets. Okay, by increasing interest rates, it will prevent more people from borrowing money because the cost is high, right? You have to pay higher interest when you borrow money. Um, so that is still going on now. So the next 2 or 3 months, or maybe the next 6 months or half year, we should see whether economies or whether governments in countries, especially in the US, because the US is always the big brother, right? The biggest economy in the world. Um, where are they heading in terms of interest rates? Because if they continue to increase interest rates, that's not a good thing for economies, lah, right? Because you need more money to borrow. You need more. Um, there's more cost to borrow money, and therefore companies may not want to expand. All right, and that can be dangerous. Remember, I told you that if companies don't expand, people don't want to spend. Economies are not growing, but inflation remains high. Then we're gonna face stagflation, right? So, it's quite delicate right now, lah. I guess it's whether we're gonna break that, or whether we can build the confidence back in the economy, or whether people are still uncertain. So investors and businesses always like certainty, right? And therefore, until there are some certainty, then only we can see the direction moving forward. Okay, and of course, the other concern is also the Russian-Ukraine war. If this escalates further, and of course, this is going to create major disruption in especially in the European economy. Major disruption, right? Right now, we can already see the effect. You have European energy crisis, and of course, if the Russian and Ukraine war go on and it escalates into a full blown war, where Russia wants, has invaded Ukraine, then definitely things are going to change in Europe. Okay, so this uncertainty here is actually quite big, especially um, uh, 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 global investors, right, who have exposure in international markets, because the one that's going to hit quite bad is, of course, would be Europe, lah, right? Um, so that's why there's this fear in the markets right now. Okay, this fear of the Russia and Ukraine war. The next one will be a property mortgage shock, right? Um, because as interest rates continue to increase, okay, people will have to pay higher interest. And if the economy is not growing and income is not growing, then we will find a lot of people will start to struggle to pay for their mortgage. All right, so we do not want to see this happening again like in 2008. It's a little bit different in 2008 because there was so much money at that point of time in 2008 that they go and lend money basically anyone, even if if your credit score is bad, if you don't deserve to get a loan, also they give it to you, right? um now whether this is going to happen again, we do not know yet, right? The quality of the borrowers. Okay, but of course we get some balance of this kind of borrowers from 2008, right? Because the shock was quite short in 2009, 2008, 2009. The market rebounded quite immediately, right? And economies start to rebound quite immediately as well. The moment they flush out the economy with money, all right? So if we do see a property mortgage shock, right, and that's when government will start to intervene again. And now they're going to face difficulty, right? Because in 2008, inflation wasn't that high, and therefore they can lower down interest rates. But this time, if let's say there's a property crisis or there's a financial crisis happening in the US, they will have trouble, right? Because if they reduce interest rates, right, money is going to flow out again and people are going to spend again. Inflation will be out of control, right? Um, but then again, if the economy grow very strongly, people will forget about inflation, right? So that's not a problem with that. If inflation normally rise together with a growing economy, but the economy has to grow faster than inflation, right? Because if the economy don't grow, but inflation grow faster, then we have stagflation, right? So it's quite delicate right now, lah. All right, in the global economy right now, and that's the reason why a lot of businesses and a lot of investors are basically staying on the sidelines, right? Including even in Bursa, Malaysia, right? People are staying in the sidelines to find, whether all this fear is able to go off, at least maybe in the next 3 to 6 months, and then when the confidence build back again, that's when markets will start to grow again. All right. But you always have to remember that the stock market always leads economy performance, right? And for the past few months, actually, we've seen Bursa Malaysia still going down. But there are, of course, when you look at the KLCI, it's only 30 stocks, right? But there are quite a number of companies that's already gone down much earlier. Last year itself, they've already gone down like 60%, 70%, some even going down like 70, 80%, because they have already reflected these fears that we are seeing here, right? It's already been discounted. So unless there's something major happen. For example, if let's say Russia invade Ukraine, then of course they would create another sell down, right? If let's say there's a property mortgage shock where people can't pay their mortgage, then that will create that additional fear in the markets, right? But if let's say things are still ongoing, there is still some fear. But if the fear is being lifted up, right, and if let's say Russia does not want to invade Ukraine anymore, they have come to a compromise, right? And the key interest rates are not rising anymore, and then you see the economy will start to come back again. But by the time the economy start to rebound, we'll probably see a markets already moving up so high. All right, so always look at the businesses, especially today. Why we say that it's the best time to invest is because the company share price may have gone down, but their businesses are still strong. All right, and in Equity Tracker, we talk about value investing principles, right? We want to buy price below its value. Okay, and the thing about markets is you'll be thinking, wow, if the company is so good, the share prices should not come down, isn't it? Well, that's not the case, lah, because prices are not determined by the company, right? Prices are determined by the investors. So if there is a fear in the market, investors sometimes just want to keep cash, right? They sell their assets, they sell their stocks just to keep cash for no reason sometimes. Even the company is doing very well because they think that, what, very uncertain, I better get out first before the company lose money, right? So this is what we want to see, right? To look for companies where share prices are below its value. Right. So how do we do that? Of course, we have certain methods and certain ways to do it. And I can't explain to you guys here on this section, but we do have an event on the 11th of March, right? On the 11th of March, which is about 10 days from now, on a Saturday morning. So if you guys interested to know how we find opportunities in terms of crisis like this, and where do we see the market is heading, right? Then do join us on the 11th of March, okay, where we have um, an event, right, with me as a speaker and also another trainer, uh, expert from Equity Strikers, Wee Kiang. So both of us will be presenting. This is a once in a decade opportunity, right? There's always opportunity when there are times of crisis. So you either make it and grab the opportunity, or you just miss that opportunity. So how to find this opportunity? Like I said, on the 11th of March, we're going to have a 2.5 hours session to basically share with you guys why we think that this is one of the best times to invest in the stock market if you know what you're doing. Most importantly, right, what you need to know what you're doing. So we have this session on 11th of March. So I do hope that you are able to join us on the 11th of March at 10 a.m. until in the afternoon at 12:30 p.m. Just click on that link there to register, or you can just scan the QR code that's on your screen right now using your phone. All right. Okay, so I do hope that today's presentation will give you some light. So if you ask me my opinion, like I said, I always look at the performance of the markets rather than the economic indicators, simply because stock market indicators are leading, right? They're faster than the indicators or the economic indicators that we see, lah, right? So therefore, prices may have gone down, but it doesn't mean that if the economy is getting bad, that the markets will go down even lower. Why? Because the markets or stock market has already come down. All right. And that's where investors always miss the opportunity, right? Investors normally follow the trend. Only when economy is booming, it's time to buy. By the time when we get in, it's already too late, right? So yeah, please do join us on the 11th of March, and then we'll be sharing more of this. All right. Okay, so if you guys have any questions, you can just type it down, because if I don't see any questions in the next 1 or 2 minutes, then I'll end this presentation. All right. So if you have any questions at all, just type it down. Okay, I'm just leaving it here because there's a slight 10 seconds gap, a delay from the live, from the time I talk to the time that you receive that message. Okay, so I'm just going to leave it a while. So if next few seconds, if I don't see any questions, then we'll end the session. All right. Okay, Jason, thank you for the question. Do you expect any similar bull run like we did back in 2020? Um, it's gonna take a little bit more time, this time, because the mess that the governments have created over the years is what we are feeling right now. So that takes a little bit longer time um, um, to consolidate, lah, right? Because only when there's a crisis, then the central banks will take action, right? But right now we don't see that crisis. So what the U.S. government is trying to do now is to try. They know the economy is already slowing down, but they just want to provide a soft landing, right, of the crisis. Because if they don't do anything right now, the market can just come down hard now. Okay, so we definitely will see a bull run again, but it's just a matter of when. But what we do, so again on the 11th of March, if you attend, we'll show you some statistics, right? Um, how long normally does a bear market last, and how long a bull market last? Okay, so bear market is normally shorter, right? It's much shorter than the bull run. So whether I'm going to expect a bull run like in 2020, no, I will not expect that kind of bull run, right? Because that one is like a sharp increase upwards because of money that is being pumped into the economy. It's like quantitative easing that we see in 2008, right? Also a sharp increase. We see the same thing that government did in 2020, and therefore we see markets going up like that as well. But the challenge right now, like I said, right, they can't just simply reduce interest rates and pump more money in the market because inflation is their enemy right now. Okay, in 2020, in 2008, inflation was still in control. It wasn't that high, right? So they can easily switch off. They can easily, reduce the interest rates and go to zero, because they were not the inflation was in control at that point of time. But the problem right now is that inflation is still there, it's still high, right? So even if there's a crisis, we may see government reducing interest rates, but it will not be as aggressive in 2020 or in 2008, right? And therefore, yes, we may have a bull run, but I think, in my opinion, is that we're probably going to see a more slower and steady bull run, rather than a fast 1 year bull run that we see in 2020 lah. All right. Okay, thank you for that question, Jason. Anyone have any other questions? Jason, if you're free, if you're in KL, just join us, in on the 11th of March, all right, so that we can present you more data. Okay. The 11th March, unfortunately, is only physical lah. There's no online lah. All right. There's no online at the moment. Okay, Chu is asking, when glove stocks were up and market had big volumes, were you bullish on the market? What about now? What are your thoughts for 2023? Down then up for the year. Yeah. So we I mean, if we look at markets, right? I mean, glove stocks were actually doing pretty good, right? In terms of their profitability, in terms of their growth, and they had cash. This is before pandemic, right? So it's quite good, right? But of course, during the pandemic, that's when they had that windfall in profits, right? Because that's again unprecedented. But we all know that it's not going to last forever, right? If you understand about how economies, especially commodities, grow in the markets, there's always this demand and supply curve, right? And I've been investing since 1997, so I've seen commodities bull run, like what we see in palm oil as well. So what happens in commodities is very simple, right? Of course, when the demand and supply, when there's when the demand and supply is, of course, there's always more demand and supply, then prices can go up. It's normally steady, but demand for gloves went up because of the pandemic, right? So it's like, this one-time jump that we see. But the problem with this is that when the profits are, when the demand is just so big, where supply is so little, um, the problem is a lot of people now will start to go into that commodity, which in this case, gloves, right? So you can see that a lot of companies start, even they are not glove makers, they also go into the glove making industry and try to compete. And then suddenly what happened? You have a supply glut, right? And once you have a supply glut, like today, we have much more supply than demand, right? Because pandemic is over, so demand of gloves have come down. But the problem is now so many companies are selling it. So yes, I mean, we were bullish, but again, the bullish definition we also have to look at, for us, on the company perspective, right? We cannot just look at the indices as a gauge, because not all companies, and become most of the companies, don't follow the performance of the KLCI. Okay, so when we see something that has gone up so much, you know what? If I've seen a profit in gloves, we have gotten out. In fact, if you are a member of Equities Tracker, even after the run up when the prices of glove stocks, right, went up from $1, adjusted prices lah, adjusted prices, from RM1 to about RM3. We have not, we did not encourage people to buy glove stocks lah. All right. Why? Simply because it has really gone up too much, right? Too fast, and it's become speculative. Okay, speculative. Everyone who have not invested in glove stocks have invested in glove stocks. Okay, they just want to ride the trend. So we apply the principle where, if there is a lot of greed in the market, we have to be fearful. All right, and when there's when there's fear in the market, now we start to get greedy, and that's the reason why we apply that principle that says that this is the best time to look at the markets. Okay, not following the crowd. That's what we want to do. If you want to be really good in investing, we can't follow the crowd. Okay, so now Market is bearish. Yes, I mean I'm in the opinion that the market is bearish and it's probably going to be bearish, but will not be so aggressive lah. It's still going to be bearish maybe in the next 6 months to a year. But like I said, in the next 6 months to a year is when we should be looking for opportunities lah. Okay, we do not want to look for opportunities only when the market goes up. Like in 2020 period, right? When the glove stocks go up so much, then only people start to chase. That's not the way to do it lah, right? So, so yes, the market is still bearish, but we're probably going to see a rebound, okay, based on our data, which we're going to share on the 11th of March, right? Because we actually look at the period, the bull periods and the bear periods, and we try to find a correlation, and therefore we get certain period, okay? We're talking about green. Thank you for your question, Chu. We'll talk about green energy, solar, the trend. Okay, this is going to be a longer term trend, right? Even EV and solar, we do have quite a number of companies. And we just got one companies like Sunview, for example, just being listed in the exchange. But it's gonna be taking some time before it kick off here in Malaysia, simply because, right, our energy, right, and that includes petroleum, gas, um, uh, and electricity are basically controlled, right? Um, for example, if you're in Singapore or in Thailand, you actually pay much higher electricity than in Malaysia. They also pay much higher fuel than in Malaysia, right? So there is really not much of a incentive to actually go into the solar trend at the moment, right? Unless the subsidies are being taken off, lah. Okay, so this one we really have to look at what are what would the government steps, right, into reducing the carbon footprint in Malaysia by reducing all these organic commodities like oil, right? And we also use gas and oil to generate electricity, right? Here, of course, we also have the dams lah, right? But if you're talking about solar trend, in the longer term, maybe yes, because um, we can't. I mean, the government can't be subsidizing all this energy forever, all right? And they also have to look at greener energy, right? But the adoption, I think, in Malaysia is going to take some time, right? So if you have time for long term, you want to invest in the long term, you want to invest in the future, in the next 10, 15, 20 years, then yes, solar may be a good trend or maybe a good opportunity lah. All right. But I don't see, because I look at some of the performance in solar companies here in Malaysia, the performance is not going anywhere lah. Basically, it goes up, it goes down, but it's not really performing. But again, if you have a long-term view, yes, green energy, sustainable businesses, ESG, right? Everybody's talking about ESG now, but it's going to take a long time, especially in Malaysia, when a lot of things are subsidized. And so that's how I look at it. Okay, thank you, Chu, for your question. All right, guys, you know what? It's already at 9 p.m. If you have any other questions, please. I mean, I hope that you guys can join us on 11 March where we can see you face to face. Because right now I'm just literally looking at the camera, right? So I can't really see you guys. But we do hope to see you face to face now that the pandemic is over and we're all going back to the norm. And that's the reason why we do not want to do online anymore, because we don't find a lot of engagement online, right? And that's the reason why we are doing physical events rather than online. All right. Okay, so with that, thank you so much. I hope to see you on the 11th of March, right? And everyone, have a good evening, and we'll see you.